Please welcome Shayon, investment partner at Multicoin. Hello.
Hi. Nice to meet you, Mia. How are you?
Nice to meet you. You're one of the few guests. I think you're the only guest that I've never actually interviewed before, so I'm excited.
Yeah, I'm happy to be here. Thanks for making the time.
So I mentioned in your introduction, lonely high conviction bets. What has been the loneliest, most contrarian thesis that you've supported, and do you have one right now?
Yeah, I mean, look, I'd say deepen as a category has been certainly lonely at certain moments in the course of the last 2 or 3 years. And it's kind of how it always is in crypto and crypto capital markets. Certain sectors and themes tend to get more attention than others. And for a kind of asset class like deepens, where the price action is like very correlated to the success of the network, so their ability to acquire resources they need on the supply side.
Mm-hmm.
It's been when the market's down that directly impacts the success of those companies. And so, we were the first to partner with Helium when they were inventing this model, and then we've sort of worked very closely with extensions of that into things like Render and Grass and GeoNet and things of that nature. But we are still extremely, high conviction on the category. I think you look at networks today like GeoNet and Grass, and they're just very steadily compounding demand side revenues. And I think it's one of the more, it doesn't really get as much airtime as it used to.
Mm-hmm.
But we're still massively convicted on, net new teams and existing teams that are continuing to compound in the space.
What's the most frustrating part about arguing with ideological maximalists who hate practical network scale? I guess this is like a question angled fighting with Ethereum maxis.
I mean, look, I love fighting with Ethereum. I love fighting in general. Like, I think one of the things that is underrated and unique and rare about our space is that, people really care. And, like, regardless of whether there are merits to their opinions, people have opinions and they are incentivized to voice them because they have capital assets that reflect the performance of, how loudly they're voicing their opinions and how accurate their arguments are.
Mm-hmm.
And that's unique, right? Like a lot of industries are fairly insular. I'm sure like in like the semiconductor manufacturing process, there are people who have all kinds of different opinions about like what is the first order correct way to do things, but you don't hear about them. They're not on Twitter, or like they're maybe restricted to like some corner, some dark corner of the internet. But like crypto is built on the backs of religious figures and communities, and I think the more I'm very firmly of the belief that all attention is good attention, and so I love fighting.
I like that. That aligns with the Solana ecosystem very much. Um, when a thesis you spend months researching fails completely, how do you mathematically separate bad luck from bad judgment?
Look, I think theses failing are it's like a part of life, right? Like it's the same as like any venture
Yeah.
investment. Like the vast majority of them are not going to work, even though the hit rate in crypto and crypto capital markets are like slightly better. But what I will say is that there's very rarely like any sort of thesis work that goes fully wasted. I think a good example of this is, we invested for the longest time in this idea of distributed compute networks, right? So aggregating like consumer grade GPUs from all around the world, or like long tail data centers, providing token incentives to the supply side to keep them retained on the network, and then essentially using them for distributed inference or potentially training purposes. The latter kind of never worked. The first sort of worked to some extent, and we made investments in companies like Render and Ionet and Cusco, and all of these were sort of the same sort of instantiation of that core thesis. And then sort
Mm-hmm.
of over time realized that just the supply profile here is not necessarily the right one, which is to say, inference workloads require such tight bandwidth, such tight networking properties. They require production grade GPUs, and just like the latency and the memory requirements of like doing this work was essentially just like not going to make it production performance grade. And so that thesis, while it continues to work on in some cases, like the data centers seem to be working, um, that thesis may not have played out exactly the way we thought, but it sort of fed into where I think this is going in the future, which is compute as an asset class. And so the idea now is, you have OpenAI and Anthropic spending trillions of dollars every year in capex, and there's no real robust financial markets around compute. Like you can hedge energy futures, you can forward reserve chips, but you can't really go long or short compute on a 6-month time horizon or a 12-month time horizon, which is ridiculous, right? Like if you think of compute as a commodity, and if it's like the entire US economy is like levered to it, you need robust financial markets, you need derivatives, you need hedging. And so now we're seeing teams kind of really build that core infrastructure around compute as a financial asset class, as opposed to trying to like organize it on the distributed ends. So that's just like one example of like a thesis that we didn't think, we knew the market was huge, the market continues to be huge. That specific instantiation that was not perfect, but like we now have a new thesis, which I think is going to be, a better instantiation of that core view.
Why does the mainstream Silicon Valley tech industry still look down on crypto infrastructure builders? I guess like this question. So let me rephrase this. Why is, because I was just talking with Oliver and he's in SF. Why is SF not interested in crypto?
Yeah, I mean, look, I have a somewhat contrarian view on this. If you step back maybe 5 years ago and you thought about where is the cheapest cost of capital for a founder, where can a founder who has the least amount of product and the least amount of experience raise the most money at the highest price? Okay, 5 years ago that was crypto, right? Those founders used to come to us, right? They used to come and want to build something that barely made sense broadly in the Web3 space. And today that founder is going to AI. They're going to the venture firms that are based in the Bay, because you can have half an idea and go out and raise $20 million for whatever agent harness it is you want to build. But it's all the same cycle. It's all global. It's all the same sort of wave. It just happens to have shifted in the other direction. And so AI is obviously, like, you don't need me to tell you that, it is the hot ball of money that, is sort of like capital flows, moves around. It was in crypto 5 years ago. Now it's in AI. And what that generally tends to attract is the wrong people. And so when I look at the set of founders today, really, the ones who are doing crypto, especially in San Francisco, like they're doing the contrarian thing. They're doing the thing, they're taking the status hit. Like they're walking around saying that I'm building in crypto. And those are the people you want. The people who are like missionaries. You don't want mercenaries who are just like in a space because it's hot. So I actually think this is like the best time to be doing crypto ventures. It's the best time to be a crypto founder. There's a lot less kind of noise in the space more broadly. And I think that's a healthier environment. Like we had gotten overextended 5 years ago, obviously. Crypto made a huge bunch of promises to the world. It delivered on a handful of them. But relative to the prices and relative to where things were, it was definitely too hot. And I think what we're seeing now is a period of market efficiency. Like markets always get more efficient over time. And that's exactly what's happening here, right? It's just re-rating in a way that is more healthy and more sound. And
Yeah.
so, yeah.
Fun question. So if you had to take all Multicoin's money, you'd get it all back, and you had to make one single bet, where would you put it? You just have one.
We've been fairly concentrated as investors historically. I do think that like diversification is the opposite, is the enemy of returns. You do want to concentrate into your largest winners. I'd say I'm most convicted, between Solana and Hyperliquid. It's kind of a toss up, right? Like those are two of our largest positions right now. They are demonstrating real product market fit. They are, I think, bellwethers for the rest of this industry. They are, they are both those ecosystems, both those communities, both those products, I think are exceptional, and a very strong example of like what you can build in this space. So yeah, I it's hard picking between children, but like I'll say Hyperliquid and Solana, and you can sort of go from there.
Hyperliquid, okay. Yeah, okay, that's good. That's valid. What do you make up of the current state of the industry and where it's going? Like we have some interest from institutions, so it's not like the industry is dead or anything like that, but there's lack of engagement, I would say, on the community side. Is this a concern, or is just the industry maturing? That's sort of what I mean by what you make out of it. And then projecting towards the future, Paint me a picture of what you think next year will look like.
Yeah, look, crypto, as I was saying earlier, right, like as an asset class, every market sort of matures over time, right? It gets more efficient over time. And 5 years ago, crypto was a fairly inefficient market. Things were priced based on attention and flows and, were pretty untethered from fundamentals. What's happening now is the pendulum has shifted in the other direction. It's because the market structure is maturing. We're just getting better as an industry at figuring out what is sustainable and what works. The consistent pattern, the two driving forces of the industry right now are sort of regulatory clarity, which is the fact that we had stablecoin legislation last year and market structure legislation that's imminent, that essentially sets strong guardrails around how these assets are going to be regulated, how they're going to be custodied, how people are going to think about them, which opens up this universe to, people beyond the 10,000 people who are addicted to crypto Twitter, which is, I think, much needed. And then the second is the maturity of the infrastructure, which is we spent the last 10 years, stress testing different, ways to build credibly neutral permissionless systems. And I think we now have a good answer. Like it looks like Solana on one end, and it looks like Hyperliquid on the other end. But like credibly neutral systems are finally at the point where they can sustain, real economic activity. Obviously, there's mistakes being made on the emissions side, on the market structure side, across a bunch of different things. I don't really think it's worth going into that. I think the more interesting point is that the traditional equity markets in the world, the credit markets in the world, are starting to borrow from crypto, which is this broader kind of behavioral shift that people used to come to crypto because they wanted volatility, they wanted variance, they wanted skew, they wanted to hit a clean 10x. That's happening in the equity markets now, right? That's happening less in crypto. There still is some version of that, but that behavior, that core risk-seeking appetite, is never going away. Right? That's something that's fundamental to humans. It's one of the theses that were extremely long, is this idea of entertainment finance. Younger people across the world view participation in financial markets not as sort of this like boring boomer retirement money management thing. It's a form of entertainment. It's a form of status. It is a new consumer behavior.
Thank you so much for joining us. It's been a pleasure to have you.
Yeah, thanks for having me, Mia.
Thank
Have
you.
a good one.